Welcome to Smart Stock Watch. It is March 3rd, 2026, and today we are breaking down the fresh earnings report from technology giant Ingram Micro. The company just released its fourth quarter and full year 2025 results, and the numbers look quite robust. Joining me to analyze the report is John, our senior analyst. John, Ingram Micro seems to have ended the year on a very high note.
Thanks for having me. You're absolutely right. Ingram Micro delivered a standout performance in Q4, with net sales hitting $14.9 billion. That's an 11.5% increase year over year, which actually put them above the high end of their own guidance range. It's a clear signal that their global IT ecosystem is firing on all cylinders as we head into 2026.
EPS performance and analyst forecasts. Let's talk about the bottom line. Analysts were forecasting an adjusted earnings per share of 90 cents, based on a survey of 5 experts. John, how did the actual results compare to those expectations?
They beat it comfortably. Ingram Micro reported a non-GAAP diluted EPS of 96 cents for the fourth quarter. Not only did this beat the 90-cent consensus, but it also exceeded the company's own guidance. For the full year, non-GAAP EPS reached $2.90, up from $2.79 in 2024. This earnings beat is particularly impressive when you consider the various macroeconomic shifts and the internal transformations the company has been undergoing.
What drove that earnings strength specifically in the final quarter?
It was a combination of that 11.5% revenue growth and significant operating expense efficiency. Even though gross margins saw some pressure due to product mix, they managed their costs so effectively that the bottom line saw the benefit.
Revenue and regional performance. The revenue growth wasn't just limited to one area. It seems like a global success story this quarter. Can you walk us through the regional highlights?
Exactly. For the full year, net sales were $52.6 billion, up 9.5%. In Q4 specifically, North America grew to $5.1 billion, driven by storage, servers, and AI enablement projects. EMEA was also strong at $4.6 billion, with growth across all lines of business, especially PCs and networking. But the real star was the Asia-Pacific region, which saw solid double-digit year-over-year growth throughout 2025, ending Q4 with $4.1 billion in sales.
It's interesting to see that AI enablement projects are already moving the needle in North America. Is that a trend you expect to continue?
Absolutely. While these projects currently carry lower margins because they are often large-scale and project-based, they represent a massive volume opportunity. Ingram Micro is positioning itself as the backbone for AI infrastructure deployment globally.
Cash flow and capital allocation.
It is. Ending the year with $1.86 billion in cash gives them a lot of optionality for 2026, whether that's further debt reduction, more buybacks, or strategic investments.
2026 Outlook and Guidance. Looking ahead, what is the company signaling for the start of 2026?
The outlook is quite positive. For Q1 2026, they expect net sales between $12.45 billion and $12.8 billion. More importantly, they are forecasting non-GAAP EPS of 67 to 75 cents. That would represent a year-over-year increase of 10% to 23%. They expect gross margins to improve and operating leverage to continue. They also declared a cash dividend of 8.2 cents per share, payable in late March.
So the momentum from Q4 is expected to carry right into the new year?
That's the expectation. They are entering 2026 with a lot of confidence, particularly as they move into the next phase of Xvantage value creation.
Key takeaways. To wrap things up, Ingram Micro delivered a comprehensive beat and raise quarter. They are growing the top line, optimizing the bottom line through their Xvantage platform, and generating record amounts of cash. John, what's your final take for investors?
Ingram Micro is proving that it can navigate a complex IT market by leaning into AI and digital transformation. The record cash flow and the aggressive debt repayment are very positive signs for long-term stability. While gross margin mix is a factor to watch, the operating efficiencies are more than making up for it. It's a strong story of a legacy leader successfully pivoting to a platform-centric model.
Thank you, John, and thank you all for watching Smart Stock Watch. What do you think of Ingram Micro's pivot to the Xvantage platform? Does the record cash flow make this a must-buy for you? Let us know in the comments below. Don't forget to like, share, and subscribe for more deep dives into the latest earnings reports. We'll see you next time.